probably the world's greatest network, to be truthful.
Mm.
And you're around some of the smartest people in the world, but you're confined. You're confined in how you are, what you do, in a way that, I just knew that wasn't me. I've always been quite individual. I like to do things differently. And so I saw the recession coming in 2000 and I wanted to trade it. I've been lucky. It's been like being taught acting by Robert De Niro and Al Pacino and whatever, because I got to speak to the world's most famous hedge fund managers all day. Paul Tudor Jones and Lewis Bacon and Stan Druckenmiller and you name it. So I thought, I want to give this a go. And so I went to, luckily, one of my biggest client, in fact, hired me, which was GLG Partners, which was a giant hedge fund firm in London at the time that ended up turning into Man Group. And I started a macro book there. And after about 3 months of doing well, 6 months doing well, they said, well, listen, why don't we start a macro fund? So I co-ran it with another guy called Ben Gill. And we started that fund and built that one up. But over that period of time, it was much more entrepreneurial. GLG was a great place. I was losing my mojo with macro. I didn't have a great year in my last year there. It wasn't a disaster, but it wasn't great. But it's how the industry had changed. It had gone from being this gunslinger's high volatility, long-term conviction world, visual person. So I distill everything into imagery.
Mm.
So which is why macro so appealed to me, because macro is this massive 3D, always changing map of the world, of all the asset classes, how they're interrelated, the economies and the news flow. And I found I can hold it in my head. And I can kind of spin it around and look at it and take different component parts aside. And therefore you can simplify it if you can make a picture of it. And so I just create that mental picture for others, because most others struggle to see the connections, to see how this could be. People can think one step ahead, but people don't think 2 and 3. And 2 and 3 is where I'm pretty good at, which is longer term, knock-on effects, how this is going to play out. That doesn't mean I get all of them right, but I've been consistently pretty good at that over time. And I can explain it to people in a way that they understand it and can grasp it, whether they disagree or agree. I mean, again, that's the beautiful thing about Global Macro Investor. I've had people who barely ever agree with me, and they've been subscribers for 18 years. He was astonishing. I never forget him calling up the futures guys at Goldman and said he bought a ridiculous position in German Bund futures, super leveraged. And he called up like 4 weeks later after putting the trade on. He goes, those Bund things I bought, where are they now? And the guy goes, well, Nick, let me just check. Well, they've kind of gone quite a lot against you. He goes, oh, that's unfortunate. I didn't realize that. I tell you what, let's just double up, shall we? He puts the phone down. I mean, astonishing. But the depth of his knowledge. I went into talk. I launched a hedge fund, an agricultural hedge fund. I went talking about agriculture, and Nick is so amazing. Is firstly, he's listening to my thesis and he goes, "Oh, that's interesting, Raoul." He goes, "That reminds me of a paper that was sent to me, I think in '66. Let me just get it. I haven't seen it since then." He remembers this paper. He like takes it out, dusts it off. It's somebody's PhD paper on crop yields. I'm like, wow. And I said, how are you interested? He goes, I'm not really interested in your fund, Raoul, because I've got these positions on myself. He said, it's really interesting because I took my wife and I set up GMI to prove that. And I've proven it over 17 and a half years. I've got a registered, public track record for GMI members over 17 years that's basically proven that exact point. So here's my example. Oh, yeah. So write it down. And every time you go and try and sell something or change your position, ask yourself, has something changed versus your thesis? So a lot of people, their thesis has changed, but they hold on to the position because they're emotionally attached. We've all done that. Or the other one is you get spooked out of something and you forget your thesis in the first place. And then you're like, then it goes back and you're like, shit, I've missed it. So let me tell you my crypto investments, my Bitcoin investment story, because it highlights it the best. Because I just recently went through the maths of this and I kind of shocked myself. So I first heard about Bitcoin during the European crisis, and it's $200. It's the best risk reward any of us will ever come across in our entire lives, and maybe one of the best risk rewards of all time. So I took that bet, right? Macro thesis, did the work, said this is probably a 10-year play, and I'm going to hold it. So first thing that happens, I put the position on, it goes up 100%. It goes up 100% a month and 500% in the next 4 months. I'm like, holy shit. I don't sell any because I've got a long-term thesis and it's fresh in my mind. It then falls 85%. One of the best trade of my life. I went back and looked at, if I just kept my initial investment at $200, I would have done, I can't remember the number, 5 times better. Even though the size that I added in March 2020 was massively larger than the first size it
Interesting.
still didn't work. I'm like, huh. And then I thought, okay, if I'd actually followed my thesis, which is when it gets very oversold and it gets to that kind of logarithmic, the bottom, the 2 standard deviations oversold of a logarithmic channel or whatever, if I'd actually just doubled my position every time, but not doubled it, sorry, just added the same amount as my initial seed investment, I'd have done like 25x. I'm like, okay. So what I thought was a great trade was actually a terrible trade. It's robust and tested, and is deep. I've done a lot of work on it. So I feel comfortable with the probabilities. Now, I love markets like anybody else. So I've got on my screen the real-time chart of ETH daily, weekly, monthly, and hourly. I don't even trade ETH. I just buy it. But I like the market and I look at the price action. And what I did the whole period was just didn't look at my P&L. So I have learned, and this is a new thing for me, how to disassociate myself with my P&L. Because if not, you're always thinking peak to drawdown or look how much it's worth now, as opposed to how far are we along in my thesis? Let the numbers take care of themselves over time. I'm learning that because, this is a hard one to learn on because the volatility is so high. Yeah. All you need, there's a hack to all of this, is all you need is a secular trend. Try not to be the smartest person in the room. Try to be dumb. Where is the obvious direction over time? Because the obvious direction over time is where you'll make the most money. You can get smart around the bets there, but the obvious direction of the adoption of crypto assets is that it's going higher. Now, that adoption rate slows and speeds up over various periods of time. So you've got a tailwind, which is amazing, right? Why does the S&P 500 outperform value and stock picking? Well, because 86 million millennials are dollar cost averaging into a 401k. So you don't need to be smart. If you look at the global economy, which is the most obvious global economy in the world that you want to be long of for the next 15 years, 20 years, it is without question India. Why? Because they've got 1.3 billion people with an average age of 28. You haven't even hit the demographic sweet spot, which is that 30 to 50 range, right? So all of these things are around everywhere. I mean, the bond market has been an amazing trade for me my entire career because it's been bloody obvious. It's in one trend, and I still don't think it's broken. I know everyone's arguing, but I've argued this for the last 12, 15 years when people say, yeah, it's going to break and everything's changed. I don't think it has.